Georgia offers many property tax exemptions. An exemption is a way of reducing or eliminating property taxes on a parcel of land. There are numerous types of exemptions and reasons for them. Under Georgia law, a homeowner can claim an available exemption, such as the homestead exemption, if they own the property and the land under it. It must have been their legal residence as well. The individual must have met these requirements as of January 1st of the taxable year. The homestead exemption is the most common one claimed for property. To qualify for this exemption, the property owner must live in the home itself. It has to be his or her legal residence as the owner. There are some exceptions to this. For example, if a person is away from his or her home for a period of time due to health reasons, the taxing authority is not going to deny the exemption. However, someone, such as a family member or a friend, has to let the tax commissioner know of this. It cannot be assumed. To qualify for this exemption, the owner must file an application for it. This is done at the tax commissioner's office. Some counties have local tax offices that may allow for this application as well. This can be done at any time during the year prior to the tax year. For example, a person must fill out an application by December 31st, 2018 to receive the exemption for the tax year 2019. If the homeowner wants to receive the exemption for the current year, he or she must have owned the property on January 1st and have filed an application by the same date that property tax returns are due for the county in which the property is located. One important note to make sure property owners know is this one. If the property owner fails to apply by the deadline, the property will lose the exemption for that year. Now, let's talk about some of the homestead exemptions offered by Georgia. The standard exemption is the most commonly used one. If an owner qualifies for the exemption, a $2,000 exemption is available that can be applied to the state, county, or school taxes owed to cities. This cannot be used to pay off interest on or to pay off bonded indebtedness. The $2,000 is not given as a check. This is not a refund. Rather, it is deducted from the assessed value of the home. For those who are 65 years and older, an exemption is also available. They can claim the exemption on the home, along with the land under it, and up to 10 acres of land that surround the home. This exemption may cover all state ad valorem taxes. Additionally, those who are 65 years or older may claim a $4,000 exemption from all state and county ad valorem taxes if their income does not exceed $10,000 for the previous year. Some types of income are excluded, including pensions, retirement funds, and disability. Social Security income may not be excluded. The state sets a maximum requirement on this type of income each year. Another exemption is the exemption for those 62 years of age or older for educational purposes. It applies to those that are residents of each independent school district and each county school district. This exemption is for all ad valorem taxes and can be used to pay off school bond indebtedness. There is an income requirement here as well. Next, there's a floating inflation-proof exemption. It's available to those who are over 62 years old. It applies to state and county taxes, but does not apply to taxes to to pay for interest or to pay off a bond debt. This exemption is based on the market increases in the property's value. If the home's appraised value jumps by $10,000, then the property owner can claim this exemption. The exemption cannot be more than $30,000. There are also some income limits on this type of exemption, and it cannot impact any city or educational taxes. Disabled veteran and surviving spouse exemptions also exist. An exemption of up to $60,000 plus an additional sum from the payment of taxes for state, county, city, and schools is available to those who are a qualifying disabled veteran. The amount able to be used depends on the current index rate. This is set by the U.S. Department of Veteran Affairs each year. If the property is valued over this amount, the remaining value is then taxed at the appropriate rate. This particular exemption applies to those people who qualify as a surviving spouse, as well as any children who are minors after the veteran dies. There are a couple of additional exemptions to consider. The homestead exemption for a surviving spouse of a U.S. service member is also available. If the surviving spouse of the armed forces who was killed or died as a result of any type of armed conflict or war, that unmarried surviving spouse can apply for an exemption. The individual can obtain an exemption for all ad valorem taxes for all levels, the state, city, county, and school. The amount of this exemption is $60,000 plus an additional sum. Like the disabled veteran exemption, the additional sum is determined by the U.S. Secretary of Veteran Affairs. Finally, you have the homestead exemption for surviving spouses of a police officer or firefighter. If the property owner remains unmarried and has a spouse that died as a result of being in the line of duty as a police officer or a firefighter, they can obtain a homestead exemption. This exemption is worth the full value of the homestead. The only detail here is that the individual must occupy the residence as their home.